Monday's trading session. We note that there are significant financial releases stemming from the US this week, in addition to the Fed's interest rate decision, which is set to occur tomorrow. In this report, we will focus on the recent developments surrounding DeepSeek, in addition to discussing the Fed's interest rate decision tomorrow, and for a rounder view, we provide a technical analysis of the S&P 500's daily chart. DeepSeek is a Chinese company that has dominated the airwaves the past few days and has been dubbed as the ChatGPT killer. The company has skyrocketed in popularity after the company launched its free AI assistant last week. The AI model named R1, created by DeepSeek, is allegedly on par with one of ChatGPT's older model and has flung the US equities markets into a frenzy as the R1 model was allegedly created for under $6 billion, whereas companies such as OpenAI, Microsoft and Google are currently spending billions in comparison. Needless to say, the announcement of DeepSeek's AI assistant has caused widespread concern over the US tech sector and their perceived AI dominance, which in turn appears to have weighed specifically on US tech stocks such as Nvidia, which lost roughly $600 billion in market capitalization. Nvidia's sell-off during Monday's trading session has been described as the largest intraday decline in history and could reignite the debate over whether or not we are in an AI bubble. In our view, companies such as Microsoft, Meta and Intel, which are set to release their earnings report this week, may face heightened scrutiny from investors for their AI expenditure and profit margins. In conclusion, the increased competition in the AI sector from China could weigh on the US tech sector. Yet, we remain slightly skeptical over the costs incurred by DeepSeek to develop their model. The Fed's interest rate decision is set to occur tomorrow. The majority of market participants are currently anticipating the bank to remain on hold in their meeting tomorrow, with Fed Fund futures currently implying a 99.5% probability for such a scenario to materialize. The market also seems to expect the bank to proceed with a rate cut in the June meeting, with a second rate cut potentially occurring in October. Nonetheless, with the markets having almost full priced in a hold by the bank, our attention turns to the bank's accompanying statement, in addition to Fed Chair Powell's presser following the decision. Should Powell's press conference and accompanying statement be interpreted as predominantly hawkish in nature, implying a prolonged period of time in which the bank could remain on hold, we may see the event weighing on US stock markets. On the other hand, should the accompanying statement and Powell's press conference be perceived as dovish in nature, it could imply a faster easing of financial conditions in the US economy, which in turn may aid the US stock markets. The S&P 500 appears to have interrupted its upwards fashion and now appears to be moving in a relatively sideways fashion. We opt for a neutral outlook for the index, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 50, implying a neutral market sentiment. Moreover, the sharp decline during Monday's trading session may have stopped the bulls in their tracks and thus may be of concern should it continue. Nonetheless, for our sideways bias to continue, we would require the index's price to remain confined between the 5,930 support level and the 6,100 resistance line. On the flip side, for a bearish outlook, we would require a clear break below the 5,930 support level, with the next possible target for the bears being the 5,770 support line. Lastly, for a bullish outlook, we would require a clear break above the 6,100 resistance line, with the next possible target for the bulls being the 6,250 resistance level. Thank you for tuning in to our financial report today. We hope you found it useful. Until our next update, from all of us here at IronFX, we wish you solid trading.